Hi there, welcome to the channel. Thanks for stopping by. This video is all about price action for the Friday close and the week ending May 16th, 2025. We'll go over the market summary, check out the S&P 500 price chart, and find some key support areas along with what I expect to happen this week. We'll also wrap things up with a look at some important economic data coming up this week, and we'll close out with the futures market. Let's start off with a market overview of the major indexes. The Dow closed up 3/4 of a point. The S&P and NASDAQ were also up. The VIX closed at 17.24 on Friday. From a sector point of view, healthcare led the gainers on Friday, closing up 2.02%, followed by utilities and real estate. At the bottom of the sectors, what performance was financials at 0.6%, technology 0.19%, and energy was actually the only sector down for the day at 0.15%. We'll look at a market summary and we'll look at it on a 1-week view. The Dow Transports actually led the gain for the week, up 7.97%. All were in the green for the week. Large cap growth was the leader at 7.11%. Large cap value was the laggard, but still up at 3.44%. When we look at the breadth of the market, we can see how many components of each of these indexes are above their 20-day moving average, their 50-day moving average, their 100-day and 200-day. From a bullish percent, indexes for the sectors, communication is 70% bullish at this point, and this is based on point and figure charts being in a bullish configuration. Consumer discretionary is sitting at 82%. Consumer staples, I think, is the lowest at 42.11%. Energy's at 68, finance is 82, industrials are 88, information technology has 95% of their components in a bullish percent configuration. As far as new weekly highs, you can look at the components that have reached all-time highs. About 10% of the S&P 100 are now sitting at all-time highs. You can look at the S&P 500 at 5.8. Dow Industrials, you have 10% at all-time highs. Dow Transports has 100% at 1-month highs. We can also look at the new lows for each of these components. S&P didn't have any that were at new lows. Dow Industrials didn't have any that was at new lows, nor did the NASDAQ 100, the Dow Transports, or the Dow Utilities. For the week, technology led the percentage upwards at 7.95%. This is on a cap-weighted basis. Consumer discretionary was second at 7.54%. Industrials at 5.64%. If we move down to the bottom of the list, healthcare was up for the week, but had the least amount of performance at 0.31, followed by real estate, which was up about 1% for the week. You can also look at the daily streak and the weekly streak. So technology has had 5 up days, and technology has had 4 weeks where the index was higher or the sector was higher. You can see that for each one of these sectors, how they're performing at the moment. When we look at the yield curve, we can see that the yield curve for the most part was up across the curve. Inflation continues to be on a steady decrease, which is something we've been looking for. Many economists expect the inflation rate to increase with the introduction of the tariffs, so we'll have to keep an eye to see if inflation grows. Producer price index had a pretty steep decrease, but has been increasing slightly over the last few months. Let's take a look at the SPX price action. So since the bottom on April the 7th, we've pretty much been on a rise up to the level of 5958.38 on Friday. Each one of these anchored VWAPs that I've been monitoring since we began talking about the tariffs, just to get an idea of where we could possibly find support. For the SPX, we did get as low as this October 13th, 2022, which has a value currently of 49.48. I don't think that one is going to be in play anymore unless we have something drastic happen. We did have 5 straight days of higher highs on the SPX. We are sitting above this August 5th, 2024 anchored VWAP, which is also very close to the 200-day moving average. We'll talk about some news over the weekend that's going to impact the markets this morning. But what I'm kind of thinking will happen here is we're going to come down and probably test this 200-day moving average and this anchored VWAP at some point over the next few days or weeks. Then what I'm hoping for is that we see a bounce off that 200-day and start looking for new highs. That would be pretty bullish in my mind. The second option that we have is dropping down to these 50-day and 20-day moving averages and this anchored VWAP anchored at January 4th, 2024. And we would want that to hold and then begin increasing. That would be a bullish indicator for me as well. I do think we have some short-term downdraft here, and I'd really feel better if we would come down and test this and then start moving back up. That would be very bullish in my opinion. Looks to cross over the signal line on April the 22nd or so. Since that point, it's moved up into positive territory and has continued to move forward. We also have an RSI that is sitting at 69.76. That's another indication to me that we're probably going to see that downturn that I mentioned here, and because we are getting into an overbought condition, along with the news that was reported over the weekend that we'll talk about here shortly. The VIX has made a steady decrease since this high on April the 7th, where we reached a high of 60.13. We have since crossed below the value of 20, which is a key line in the sand for me to indicate volatility is in a good position. We have continued to drop until we're currently sitting at 17.24. We might see a little rise in the VIX today with the futures market down. This is some of the economic news and data releases that I'll be watching this week. Monday and Tuesday, we do have Fed speakers. This week, we have Fed speakers each day of the week that will be speaking. Some of those can have market moving implications. On May 21st will be mortgage applications. May 22nd will be the jobless claims, the S&P Global PMI data, and existing home sales. And Friday, May 23rd, will be new home sales and building permits. So on Friday, after the market closed, it was announced that Moody's had downgraded the U.S. sovereign debt credit rating. So now the United States no longer holds a perfect credit rating with any of the three major agencies. This slip from top tier status occurred after Moody's Investor Service pulled the plug on its AAA rating, downgrading it to AA1. Fitch had already lowered its credit rating back in 2023. And the S&P was the first to strip the U.S. government of its AAA score in 2011. So this has occurred over a 14-year period of time. But that was announced by Moody's on Friday, so that's going to have an impact on Treasury yields and the markets today. So let's take a look at those. So let's take a look at the Treasury yields in the futures market. We can see the 30-year has crossed above 5. It's rising 7.3 basis points at this point in the futures market. The 10-year has increased to 4.55 or 6.6 basis points. The only one that I see is going to be down is the 2-year. 0.2 basis points at 4.01 yield. Then if we turn to the futures market, we can see that it's going to impact the major indices as well. So the Dow looks to be down about 355 points or 0.83%. S&P down 75 points, 1.27%. And NASDAQ at 347 points down or 1.61%. So we'll see how that plays out this week. It's going to definitely be market moving. I hope this market overview is helpful. I thank you for stopping by today. If you found the video helpful, please subscribe to the channel and click that like button to help support the channel. As always, your comments are welcome about how to improve the content and add value to your experience. Thank you, and I wish you the best in your trading journey. Remember to trade well.